What is going on, Lucid fans? Welcome back to Financial Journey. So today I want to talk to you about CPI data. That is the hot topic everyone wants to know, and also people want to know, why is Lucid up 1.5% when CPI was so bad? I'm going to go over data points, everything that you need to know for today. But before I get into any of that, making sure you guys hit that thumbs up and subscribe. I greatly appreciate that. With that, let's get right to it. So live ticker going at the very bottom, like I said, 1.5% up, 5 million for volume, and that is a very big deal. We are only roughly about 1 hour in the trading day. 24.3 is the average, and block volume 384,000 shares being purchased by institutions on the secondary market. So clearly a lot of big money is getting in. I'm going to explain what that is at the end. So at the end of the day, we were very much red to start off, because just looking at the CPI data, it was very bad. Just to look at it on this perspective, so CPI, the forecast was 8.8%. It came in at 9.1. On a month over month, it was forecasted to be 1.1% of an increase, and it did actually come in at 1.3. So very big deal if you ask me, and largely because, and this is just the breakdown right here. So this is obviously the nitty gritty. I think in general, if people just look at these numbers, they panic. But once again, I think a lot of people are finally looking at the finite details of this, because if you look, majority of things are actually pretty stagnant, if not down. For instance, food, it was in May 1.2, June 1%. So that in reality went down, but largely because of energy. Energy has been really messing things up for quite some time. So you can even see the broad basket of energy was up 3.9 in May. Now it is up 7.5%. So that's a pretty hefty increase. The only thing down in that aspect or that sector is fuel oil, which it went from 16.9 down to negative 1.2. Outside of that though, everything is up significantly. So this is where, again, it is giving a little bit more of a optimistic viewpoint, because at the end of the day, oil has gone down a huge amount, roughly about 20% over the last week or so, insinuating next CPI data should be a little bit more normal, if you want to call it that, because the energy component will be down considerably. So again, insinuating that we might have a good amount of kind of a rebound. And keep in mind, when we are disclosing the July numbers, that's going to happen in August. So this is where a lot of people are saying that potentially August will have a massive rebound. And unfortunately, I don't mean to always bring up Jim Cramer, but because he does have a big following, typically what he says has some merit to it. A lot of people really take that for his face value, even though his kind of credibility is out the window. But still, Jim Cramer does kind of reiterate exactly what is being said in the market, that August is going to have a very big rebound. He did even tweet today saying that the last bad number, and obviously you can even see people who are just posting saying that he's a clown, which in general is kind of funny, but at the end it might be right, that this might be the last bad CPI that is to come out. And clearly, just want to show you this because I like to obviously give you a good breakdown. A lot of big money has been buying Lucid behind the scenes just today alone. Once the CPI came out, and obviously again, if you actually look at it and take out the energy component, it's not too bad. So this is why a lot of big institutions are getting in. And like I said, just within the first 1 hour of the trading day, you already get this amount right here. So pretty significant if you ask me. But at the end of the day, a lot of sharks are actually circling around Lucid and the broader market, and they are called shorts. So right now, I just want to give you a quick update on that. So they are actually, despite everything, increasing 0.8%, works out to be 2.28 million shares being additionally shorted as of right now. Like I said, within the first 1 hour of the trading day, cost to borrow average is 19.48. So that has been going down a little bit, and typically, like I've always said, short interest and cost to borrow are a little bit more inverse. So the fact that cost to borrow is going down, short interest obviously should in theory go up. So I think that's a little bit more normal, but still, shorts, they're ready and able to take advantage of all of the kind of fear that's out in the market and benefit. But at the end of the day, there is some positive things that is coming out about Lucid, and it is largely because of Apple. So the Apple CarPlay has been seen in the Lucid Air at the test drive event. In the end though, this is actually a big deal, because hypothetically it was supposed to have been in this update. Unfortunately, unfortunately, it doesn't appear to have been done so. So I think a lot of people were just now assuming it is going to be in the next quarterly big update, but based on this, it does appear that it might be coming. So this is a very positive thing. And looking here as well in a little bit more of a post based on Lucid Insider, looking here, it does reveal and more so accommodate for the Android Auto support as well. So it does look like Lucid vehicles are going to have both Android and Apple capabilities. Very positive if you ask me. So I think this is one of the things that, again, puts Lucid above the rest, has amazing technology, and being able to accommodate for both individuals, that's kind of hard to come by in most vehicles. So it's definitely very good to see Lucid kind of going in that trajectory and that kind of movement. But with that though, I'm just going to cap it off with some technical analysis and give you a good projection of possibly where things might be going. Just starting off looking on the actual chart. So I generally have a lot of good indicators that gives you good representation of a lot of different things. Right now, stochastic still does have a little bit more of a bearish sentiment right now, red line above the black. Number of buyers is kind of maintaining itself, so you can tell that based on the momentum indicator. But that is very positive, the fact that CPI data was very bad, but yet the number of buyers is for the most part kind of going up. Like I said at the very beginning, the actual volume is significantly higher. RSI is currently at 56, and on the actual chart, we're kind of in no man's land, if you want to call it that. So we're between the higher percentile of the Bollinger Band and that 50-day moving average, and we haven't really touched either of them. And in the end, it goes to show that we're very, very much undervalued and that we should, in theory, be significantly higher. That's how I interpret things. Keep in mind, I'm not a financial advisor, so do your own due diligence. In the end, this is just for entertainment purposes, and I hope you're entertained by all this. So I just want to cap it off and go over more so a micro and macro view of it, starting with Fibonacci. Looking here, 1767, as I always reiterate, that is basically the pivot point. 1957 is exactly where we are. So still between that pivot and the R1. Typically, the R1 has a little bit more of a resistance that we need to break over. So 1967 is something that we will have to really kind of juggle with. Hopefully, we have enough today to kind of push over and break out of that. Again, this is more macro view kind of stuff. Micro, just want to give you a quick sum of this. First, second, and third support. 1978, 20s, 23, and also at 2099. So in reality, it's fairly good. We do have them tight knit in more so the second and third, so we do need a good catalyst to get over that. But at the end, that is basically the outside Bollinger Band. So typically, if we do break outside of that, we need something really to justify it, or else we just go back down. As you guys know, I say that a lot in a lot of videos. First, second, and third support points. So you can see 1735, 1780, and 1856. Like I said in previous videos, if CPI was going to have been bad, most likely we were going to break past the first support, which is exactly what happened. Only barely though, so 1855 is our low. Great opportunity for individuals who bought, so let me know in the comments below if you did buy in the 18s, because you never know. Right now it does appear that things are starting to kind of rebound, and if Jim Cramer is correct, then this is the last bad CPI data, and ultimately the next thing that we do need to look forward to as far as fear wise or whatever might influence the market is on the 27th, I believe it is, for the Fed meeting, and we'll see what they are going to increase the rates, because they did recently say that they're going to most likely humor 150 basis points over the next two meetings. So whether it's a 75-75 or 150, whatever it might be, as far as kind of combinations, that's something for us to look forward to, but I feel that it's already been factored into the price for a lot of growth stocks. So hopefully we do have enough momentum to continue on up, and then hopefully it'll just be 20s and 30s, and then we will be back at all-time highs. Like I said, I'm not a financial advisor, but with all that, let me know your thoughts on Lucid in the comments below. If you haven't already, hit that thumbs up, subscribe, do all that fun stuff. Greatly appreciate that. But with all that, I appreciate you guys watching, and let's all make a lot of money on Lucid.